Why did Mukesh Ambani build that ugliest building?
Antilla.
He built it for 6,000 crores. Today it is 18,000 crores. 3 times in 15 years?
Can I also say a house that I'm buying today for 1 crore will potentially become worth 30-40 crores in the next 30 years?
Absolutely. So real estate as an investment, if it is not your first home, should be a 10-year minimum horizon, and it will give you fantastic returns. Average 5% CAGR on an annualized basis and 2 hikes in which your property can give you anywhere between 25 to 50% return.
So according to you, what is a good EMI to salary percentage?
Not more than 50%. The only thing that doesn't go in favor of real estate is it is not liquid. But that is why the returns are far more than that. Because it is not liquid, you don't sell it. If it was liquid, you would have sold it after the prices were double. That's what you do in capital markets.
Right.
So I say it is a blessing in disguise that real estate is not liquid.
So what are some builder negotiation tactics that I can use when I sit in front of them?
The best thing that somebody can do, I should be saying that, but I will still say that, is, you can...
It's an absolute honor to have somebody who has the experience in real estate equivalent to my age. I'm sure this conversation is going to go on for a couple of hours. And by the end of it, I know I will be 10 times smarter about the world of real estate. This is something that I've just gotten into. I've always been anti real estate, for reasons that you might be knowing. But very, very open to you changing my mind by the end of this conversation. So if you can educate the audience about what are the fastest growing cities in India right now, if I want to make a real estate investment.
Okay, so what has happened is real estate from 2021 to 2025 has been on fire. The markets have grown quadruple times.
Right.
Now, despite that, the top 7 cities, Mumbai is the biggest real estate market. Mumbai, Pune become 50% of the top 7 cities. Then it is NCR, which is Gurgaon, Noida, Delhi. Then you have Bangalore. Then you have Hyderabad. Then you have Chennai. And then you have Kolkata. And it is in the last 2 years, the tier 2 cities like the Chandigarhs, the Indores of the world, Mysore of the world, Cochin of the world, Nagpur of the world, Goa has blasted.
Yeah.
The destination and the cities, Sharan, which were second homes, have actually blasted. And I figured out why Goa has blasted, because you want to buy in a place where a flight goes. Rather than buying in Shimla, where you have to take a flight to Chandigarh and then you drive down to Shimla. The beauty about Goa is, accessibility builds real estate. Infrastructure builds real estate. Connectivity builds real estate. And finally, people build real estate. So the beauty of real estate is it is very human. It is very people-oriented.
Yeah.
And however, we are talking about prices, but I never look at real estate prices or real estate trends in relation with prices.
Okay.
I relate it with behavior.
Interesting.
Because the moment you look at the behavior, you can start looking at a pattern, which shows you whether the prices will continue to go up, whether the prices are going to be stagnant, is the market going to be fast, normal, or is it going to slow down? So right now, the markets are kind of settling down, because last 4 years, they were up, 25% growth CAGR for 4 years. You can figure out what the math is.
This is for all the cities.
Most of the cities. It was crazy. Actually, after 2 years of COVID, you could not buy a ready-to-move-in apartment. There was no apartment.
Today's video is brought to you by GRM Overseas. Started over 50 years ago as a rice trading business, GRM today supplies basmati rice and food products to more than 42 countries worldwide. From advanced manufacturing facilities to global quality certifications, they've built a serious export-led food operation without making too much noise. What's interesting is that GRM isn't just focused overseas. In India, they're expanding their FMCG presence through their 10X brand, covering everyday staples like rice, atta, edible oil, and ready-to-cook products. They've also made strategic investments including Rage Coffee, showing a clear eye on future-focused consumer brands. Sometimes, the most interesting businesses are the ones building quietly in the background. You must have also seen faces like Salman Khan and Saina Nehwal associated with the brand, adding to its growing visibility and trust. Add to that a strengthening distribution network, promoters increasing their stake, and a long-term vision focused on scale and quality. And from what's being heard, a major announcement could be on the horizon. So check the link in my description for more details. And now, back to the video.
And out of all of the cities, which city has shown the highest growth in the last 4 years?
I think in terms of prices, NCR, which was the most stagnant in the last, from 2013 to 2020, you were not able to sell an apartment in NCR because NCR had larger sizes. The prices were more, and NCR is a more investor-driven market also. And you hear, right? People buying 100 crore apartment in Gurgaon.
Yeah.
Now, that's crazy, but that craze was reality. I've seen DLF properties which were for 5 crores going to 20 crores. In NCR, if you buy a 5 crore apartment, that is mid-segment in Gurgaon.
But what really caused that boom in NCR? Like what exactly
So
happened?
one, I think there was a lot of pent-up demand and a lot of NRIs started moving in and buying it. Third, a lot of startup capital was in NCR. And the beauty is,
These IPO
one of the only ways to save tax when you sell your ESOPs or equity
Interesting.
is to buy a residential property.
So basically the company
Not even a commercial property.
basically the startups which went public created a lot of millionaires in these startups.
Created a lot of millionaires.
The only way they could save tax is to park the money in real estate.
Yes.
Which caused the real estate boom in NCR.
Which caused the real estate boom in NCR. Mumbai is Mumbai, right? The markets went up. Lot of money was created in the markets, and a lot of money when people started booking profits, they started moving it into real estate because they realized that this is the time to book profits because the markets just shot up.
Correct.
Right? And people made money in gold, people made money in silver, and it's not about hard assets or soft assets, it's just about a trend. You know, when people started investing in gold and gold was going up because the markets were sluggish, a lot of people moved into asset allocation. Finally, it is about asset allocation. And that is why you have to review your asset allocation to rebalance your portfolio. So behavior is more important to understand real estate trends. So when, Sharan, people start asking me, will the house get delivered and not how much return I'll get, I get a feeling now the markets are going to slow down. When the investor starts asking, is the compliance okay? Is the governance okay? Right? And he's not asking about the rate of return he's going to get in his investment. Then I start thinking, boss, there's something, because finally, when capital chases discipline, that means the markets are becoming normalized. When a home buyer is buying a home, not for the home, but for rate of returns, that means markets are very fast. So you have to focus on the behavior. I think the markets are normalizing, but they will still give 5 to 10% of return. And over a period of time, real estate is a beautiful asset class. As I said, the property that my grandfather bought or your grandfather bought, let's calculate the rate of returns if they bought it 50 years back. Real estate, the long term is 50 years. Equity markets, the long term might be 3 years. But finally, it is about discipline. Why do we sell SIPs? Anything which is connected with discipline will do well. So you stay in the market, you will make money because you will not look at it from a short-term perspective. So real estate as an investment, if it is not your first home, should be a 10-year minimum horizon, and it will give you fantastic returns. Average 5% CAGR on an annualized basis and 2 hikes in which your property can give you anywhere between 25 to 50% return.
Interesting. So you said that real estate, the market cycles are much larger. And you gave this example of our grandfathers investing back in the day, and they've obviously seen 100x growth. Looking at that, can I also say that a house that I'm buying today for 1 crore will potentially become worth 30, 40 crores in the next 30 years. Because
Absolutely.
that's what our grandparents saw.
Absolutely. Look at inflation. I don't know what the real inflation is. That's a different conversation altogether. If you are just making 5% above inflation, it has to be 30, 40 crores. Your children will have 30, 40 crores. It has to be. 30 times in 30 years is a benchmark I give
For real estate.
for real estate.
So one way to look at is what has happened in the last 30 years and try to predict the next 30 years. But another thing that I'm looking at, which concerns me, is the affordability of real estate. Like 30 years back, the income to a house price ratio, or let me say ulta, the house price to average income ratio was probably not as high as it is what is today. Like for example, today you flew in from Bangalore. If I take a 3-bedroom house in Bangalore today, is about 2 crores.
Perfect.
And if I look at the median income of a person who is looking to buy his or her first home at the age of 30, is probably about 10 to 15 lakhs per annum, which tells me that the house price to the income is anywhere between 15 to 20 times. Was this the same situation 30 years back when our grandparents bought their house? I don't think so.
Absolutely.
It was still 20 times their income.
Absolutely. See, you have to understand, my father retired from the army. The plot that he bought, which is a 250 square feet, 250 square yard plot in Chandigarh, in 1990, he bought it for 50,000 rupees.
How much big was the plot?
250 square yards, 2,500 square feet.
2,500 square feet for 50,000 rupees.
He was getting another plot. My mother requested him, adjacent plot, please buy this also. He says, I'm 20,000 rupees short. And he told my mother, you think small. We are not going to stay in a, 250 square yard, 2,500 square feet plot. We are going to stay in a 5,000 square feet minimum. Rest is history. He never bought.
He didn't buy.
He never bought 5,000 square feet. He never bought the plot which is adjacent to it, which was 250 square yards or 2,500 square feet. He bought that for 50,000 rupees. You know what is the price of that plot today?
Today it would be probably 2 crores.
6 crores.
Okay.
And it was in the suburb of Chandigarh. Chandigarh today, after Bombay, is the most expensive market in the country because it is just 10 by 10. Rest is Haryana, which is Panchkula. Then it is Mohali, which is Punjab. Chandigarh is like Delhi. Now, why? Delhi is surrounded by Noida and Gurgaon. But you don't see development in Delhi. It's restricted. Same is the case with Chandigarh. 50,000 rupees invested
Became 6 crores.
is 6 crores today.
Over what time?
Over a period of 1990, 2025, 35 years.
Wow.
Because the price is never of the building which is built on the plot. It is the price of the land.
Right.
Because if it is a 30-year-old building, anybody who buys it will demolish it and make a new one.
So do you think such kind of returns can be seen in the apartment space as well?
Why not? Why are we seeing 100 crore apartment sold in Gurgaon? It's an apartment. It's not plot. It's not a villa.
No,
It's
I don't-
10,000 square
I
feet.
don't know the reason even.
I'll tell you, it's 10,000 square feet. Overlooking a golf course, people are paying 100 crores. I'll tell you why. Because for the rich, one, you don't have apartments of that value. So if you want to tell people you are rich, you want to go there. So the price has lost its value. See, in shares, in capital markets, there is an intrinsic value of the share.
Yeah.
Correct? That intrinsic value of the share, if it is 100 and if the share is trading at 50, people say buy.
Yeah.
If intrinsic value is 100 and it is trading at 200, people say sell.
Yeah.
There is no intrinsic value of real estate. Where is the benchmark? What is the benchmark?
My neighbors.
Your neighbors.
Or what transaction happened
Yes.
near me.
And what is the intrinsic value of gold? Why has gold doubled in the last 1 year? What is the reason that gold has doubled in the last 1 year? What is the intrinsic value of Bitcoin? Now, Bitcoin is the next level of equity. Now, everybody is coming and investing in Bitcoin. 10 years back, imagine if you and I would have invested and bought 10 Bitcoins. I think we would have spent 10,000 rupees.
Yeah.
And today, it would have been $1 million.
Right.
Any asset class, Sharan, which does not have an intrinsic value, has an unlimited upside and an unlimited downside, like a Bitcoin. But if it is real, it cannot go down beyond a particular value. So after 30 years, what is happening? Now you've raised a very important point of affordability,
Yeah.
right? Real estate expands with infrastructure. What has happened in India, beautiful in the last 5 years, is road, network, connectivity, airports, bridges. Real estate grows with connectivity. Real estate grows with infrastructure. 10 years back, going to Vashi was a pain in the backside. Now, going to Vashi or a Kharghar...
There are people from outside Mumbai. Can you
Yeah.
explain Vashi?
So Vashi is the suburb of Mumbai, right?
Yes.
10 years back, you could buy a 2 crore worth apartment, 3 bedroom in Vashi. Today, the same apartment, some I remember Akshar, I used to only see that building. It's unaffordable because the connectivity is beautiful. You have bridges, you are connected from Worli to Vashi, you have Atal Setu, and this is what triggers the distance between Mumbai and Pune. What happened? Why did Pune prices
So can
go
you
up?
complete the Vashi story? What is the price
Yeah,
today?
so the price today is 20,000 rupees a square feet. It was 5,000 rupees a square feet 10 years back.
4 times in 10 years.
But that is not the whole point. The whole point is, why did Vashi come up? Because there was unaffordability in Mumbai. So now another Vashi will come up ahead of Vashi because the connectivity is there. Over next 30 years, Mumbai and Pune is going to be one stretch. There are going to be 10 cities between Mumbai and Pune. And you would take 1 hour from mid of that expressway to come to Mumbai.
So that's
Because within Mumbai, you see how the roads are under the sea, above the sea. And Mumbai is one of the best examples where infrastructure has developed beautifully. You look at all that Eastern Expressway. 10 years back, it wasn't there. Look at the prices. Real estate is about infrastructure development. Real estate is not about anything else. Earlier, 10 years back, from Mumbai to Pune, when expressway was not there, or 20 years back, it used to take 6 hours. Pune expressway came, it used to take 2 hours.
Oh, earlier Mumbai to Pune was 6 hours.
6 hours. You had to go through the ghats.
Oh.
How do you look at... We have 125 airports. US has almost 5,000 airports. And we are dancing that we have 125 airports and we'll get 200 airports. Imagine when you have 5,000 airports. Do you think we can be like US in 30 years? If we are saying Viksit Bharat 2047, developed India, housing for all, everybody has a house, why are we saying housing for all? We are not saying mutual fund for all. Because that's roti kapda makan, right? The Prime Minister is saying housing for all.
Right.
He's not saying mutual fund for all. He's not saying please do SIP. He's not saying please do recurring deposit. The banking industry is going for a toss because nobody is doing a fixed deposit. Everybody is moving to mutual funds.
Yeah.
That is a different story. But why is the Prime Minister saying housing for all? Because Viksit Bharat, a developed country, says everybody has a roof on their head. Imagine if 2 crore people buy homes. Right now, we sell 5,000 homes worth 5 lakh crores. Imagine 2 crore people have to buy homes in the next 20 years. Average value is 1 crore.
How many people in India do not have a home? Is there a data on that?
Yes, I think there are at least 20 million people who don't have a home if we talk about non-rural. And there is tremendous urbanization. What is growth? Urbanization. People are moving from a village to a district, to a tier 3 city, to a tier 2 city, tier 2 to a tier 1 city.
That's been the project.
Yes. Today you are talking about Nasik, Nagpur, Kolhapur, Aurangabad. Earlier it was Pune. Now you're talking about Mysore. You look at the Mysore Expressway, Bangalore to Mysore, 2 hours. You reach Coorg in 5 hours. All connectivity. Why are plotted communities coming in Mysore now? And why are people from Bangalore going and buying there? Because they know in 10 years, if they buy it for 5,000 rupees a square feet, it's going to be 10,000, 15,000 rupees a square feet. This is lazy capital working for you.
Basically, the government infrastructure working for your capital appreciation.
Yes, government infrastructure, which is roads, bridges, dams, and airports.
Interesting.
I have come here in the morning. I'll take the 8:45 flight. I'll be in Bangalore. Look what happened when Indigo happened. The whole country came to a standstill.
Yeah.
That is the importance of connectivity.
So, by that logic, should I only invest in real estate projects which are still not having their infrastructure fully developed to capture that upside potential in the future? Like, for example, right now we are in Andheri, which is fairly well developed. So, if I buy an apartment building in Andheri, can we say that 30 years from now I will 30x in a place like
I'll
Andheri?
give you a perspective.
Okay.
This office of yours, do you pay rent?
Yes, I pay rent.
Let's assume you are paying 250 rupees per square feet
Okay.
or 200 rupees a square feet. You are in Andheri,
But that was exactly right. 250 rupees
Right?
per square feet. Yeah.
right? So 250 per square feet. This is 10,000 square feet.
That's right. No, 5,000 square feet.
5,000 square feet. 5,000 into 250, 12.5 lakhs.
Yes.
Right? Now I tell you, Sharan, let's do your financial management. Right? You are a wealth manager. I'm also a wealth manager. But I have a bias for real estate. First thing I'll say is, Sharan, you know what you should do? Figure out a good place in Navi Mumbai,
Okay.
near Kharghar, which has a metro station nearby. I will get you something for 100 rupees a square feet. You save 150 rupees a square feet and you have that EMI released and you buy a property.
What EMI released? I don't understand.
12.5 lakh is rent. I'll take your rent to 5 lakh rupees.
Okay.
I'll take you to Kharghar or Navi Mumbai. Beautiful building, same standard, same commercial standard, near a metro station so that your people don't have a problem reaching there. Okay, I'm sure everybody is not staying in Andheri.
Yes.
All these kids don't stay in Andheri,
He's only from Navi Mumbai.
right? So people can't afford it.
Yeah.
And Mumbai is resilient. 30 years back, people used to come from Virar. Now I have released 7.5 lakhs of your monthly rent and I get you a property. And that 7.5 lakh, which you're paying to as rental, starts earning for you. And you buy a property worth
10 crores.
10 crores. First of all, it's hard asset. Your parents, your in-laws, your friends, they'll say, Sharan, what a property, yaar. 10 crores worth of property. Now, nobody says, oh, wow, what a portfolio, yaar. What a beautiful SIP. 1 lakh rupee of SIP you do. You don't even want to tell people. Suppose I do a 10 lakh rupee SIP. I don't want to tell people I'm doing a 10 lakh rupee SIP.
Yeah.
But why do I tell people I've bought a 10 crore property? Why don't I reveal my personal portfolio to people that I have so much of fixed deposit, so much of mutual fund, so much of derivatives, so much of Bitcoin, so much of this. I have 20 crores in portfolio. Why doesn't a Gujarati in Bombay or a big Saukar in Bangalore tell people that this is my investment in mutual fund, deposit, cash, jewelry, watches? But the moment you buy a property, first of all, you will not buy that property without showing it to your dad.
Yeah.
Now, this is Sharan Hegde, who understands personal finance so well. But the moment it comes to, especially if it is a residential property and you're married, you will not buy it without showing it to your wife. You will not buy it without showing it to your father, mother, discussing it with Ashwinder, saying, Ashwinder bhai, I was buying 10 crores property. Everybody's given me advice, but till the time you don't say, okay, I will not buy it. That's the beauty of real estate. It is a behavioral asset which increases your self-esteem, which increases your self-respect, which stamps that you are a rich guy without saying it. They'll say, Sharan just bought a 10 crore property. Moment he'll say 10 crore property, 50 crore ka aadmi hai yaar. He's worth 50 crores, right? And why do people want to be rich? One is for comfort. Second is for announcing that they are successful. Being rich is a great thing if you know how to handle it. Because it demonstrates that you are successful, you are victorious, you have achieved something in life. And the only benchmark is money. And within money, the biggest benchmark is real estate. Why did Mukesh Ambani build that building?
Antilla. The
Ugliest building.
$2 billion building.
$2 billion. Why did he build? He built it for 6,000 crores. Today it is 18,000 crores. 3 times. How many times? So, oh, wow, beauty. So we were saying 3 times in 30 years, 3 times in 15 years.
Yeah.
And it is for a high cost investment. But why did he build? What was the need? He could have invested in mutual funds. He could have bought gold. He could have invested in a business. Why was there a need to build that building and call it a house? Real estate is a mindset. It is a behavior. It is an asset class which reaches before you reach.
So to answer that question, if I have to, let's say, think of investing in real estate, should I go to a place which is already well developed and established with full infrastructure? Or should I go to a place which is getting developed now? Which, from a capital appreciation point of view, how do I look?
Always getting developed. Real estate is about vision, Sharan. That is why affordability will always remain, but the cities will expand. Affordability can only come when Worli will move to Vashi, Vashi will move to Pune, Pune will move to Kolhapur, so on and so forth. You know, Bangalore was earlier CBD, then people moved to Whitefield was 3,000 rupees a square feet in 2000. Today it is 20,000 rupees a square feet. Now I tell people buy it in Hoskote. Prices are 5,000. No, Hoskote is so far. Now this 5,000 will become 20,000. Whitefield villas are unaffordable. So what will happen? The cities will keep on growing. What is happening in the US? People stay in the suburb, work in the CBD. That is what will happen in India. People stay in the suburb, work in the CBD, infrastructure, metro, monorail, flyovers, underwater bridges, so on and so forth will keep on coming. Connectivity will keep on doing. Affordability has to be there. But the government needs to do a lot of work on affordability because there needs to be an affordable housing policy that needs to come in India so that affordability can be tracked. There needs to be areas where only affordable housing will come.
Right.
Beautiful, top quality affordable housing comes so that everybody has a house. I'll tell you about a developer, Signature Global, good friend of mine, Mr. Pradeep Agarwal. He runs it. He only came in affordable housing. He's built affordable housing worth 5,000 crores. He sold it worth 5,000 crores. Today the value is 20,000 crores. So imagine somebody would have bought it for 30 lakhs. It is 1.2 crores.
Wow.
So affordable, there's a lot of land.
I think Bangalore has this thing called BDH, I think.
Yeah, but that is very small. Like DDA is there in Delhi, but that's not affordable. Affordable housing is public-private partnership, a policy. The private developer makes money. You get subsidized interest rates. You get better interest rates for the home buyer. You get better interest rates for the developer. You get the land at a better price. The government helps you to give the land. There is land pooling. And you do 100 acres of township, affordable housing. Why will somebody not buy their first home for 50 lakhs? And if they pay 10 lakhs as down payment, 40 lakhs as home loan, which is 40,000 rupees of EMI, they will figure out a way to pay 40,000. If husband wife is working, they have 1 lakh, 1.5 lakhs, they will figure out a way. Their SIP will pay for it.
No, you are absolutely right. For the average middle class in India today, who is thinking of buying a house, the household income of husband and wife, I would say on average is 1.5 to 2 lakhs per month.
And one child.
Right. If that is the case, paying a 50-60,000 rupees EMI is great. But to your point about this affordable housing, there's not really that many affordable housing options in India.
So that's what I said. They were, but what has happened is, Sharan, another trend that happened was last 4 years are the only 4 years when the growth of premium housing was faster than growth of affordable housing. Because somebody wanted 2 bedroom, went for a 2 bedroom plus study because COVID happened. They wanted one place for their work. People upgraded. Then they realized home is very important. Let's have a good quality home. Even in Mumbai, people upgraded. Because earlier Mumbai, what was happening? You go in the morning, come back in the evening, you have one Khopcha, 1 bedroom, 1.5 bedroom, 2 bedroom, you're sleeping and you're going away in the morning.
Yeah.
Then suddenly for 6 months, 1 year, they were in that room. People went crazy. Mental health was an issue.
Right.
That is why people figured out that assets is not just ROI. Equity is ROI. Equity is monthly income. You have STP, you have SWP, so on and so forth. But this is like you earn in steps.
So, according to you, what is a good EMI to salary percentage, which a average middle class person
Not more than 50%.
Not more than
Total
50%.
debt, EMI. So
Total
which means your credit card bills, which means your TV EMI, which means your home loan EMI,
iPhone EMI.
iPhone EMI. If you can decide you want an iPhone on EMI or you want to kind of become smarter and become rich. If you're not born rich, at least die rich. That's in your hands. So 50% has to be your debt service ratio.
Which
you
means
get
if I look at the home loan EMI and other EMIs, there is car loan EMI, education EMI, personal loan EMI, electronics EMI. This itself is probably for most people 10 to 20% of their income.
Perfect. I was going to say the same thing. So 30% has to be home loan.
So that's it. So if I'm making 1 lakh rupees a month, my home loan EMI should not be more than 30,000 rupees.
Absolutely. And generally, the data is saying that people who have a household income of 1.5 lakhs, they are 100% going for their first home.
Correct.
So it is 75,000, 25,000 is everything else, and 50,000 is your home loan, which is, you buy a property worth, anywhere between 50 lakhs to 75 lakhs, depending, because what happens is in Indian household, your father-in-law will help you with 10 lakhs, your father will help you with 5 lakhs. You'll say, okay, bacche ghar le rahe hain, let us give them some money. Friends and family, you can borrow 4-5 lakhs, give the down payment, take a 50 lakh thing. And as it is, if you were paying rental, you will save on the rental. So if you're paying 25,000 as rent, after 4 years, वो rent बच जाएगा.
Correct.
तो आप इधर आ जाओगे. और ये फिर growing asset है. ये भी ग्रोइंग एसेट है, राइट? और अगर आप रेंट पे ही रहते हो तो आप उसको रेंट पे दे सकते हो, तो आपको 3-4% रेंट मिल जाएगा.
So basically, if I am looking at buying a house in India right now as a middle class Indian, the house value cannot be more than 1 crore.
Absolutely. And you have enough and more in that crore, especially in tier 2 cities where you have so many of your clients, audience.
So now most of the audience who are watching this right now, from our data, around 60% are metro city people. Mumbai, Bangalore, Chennai, Delhi, Hyderabad. Now, when they hear this, that what do you guys? They will be like, what are you guys saying? The buildings around my area, they're quoting 1.5 crore, 2 crore, 2.5 crore for a house. What do we tell to these people?
Beautiful question, sir. If I were you, I will tell them, you are in Bangalore, but where do you belong to? Oh, I came from Indore.
I came from Mangalore city.
I came from Mangalore city. I came from Mysore. I came from Cochin. I came from Telangana. I came from Hyderabad. I came from Visakhapatnam. I came from Kolkata. I came from Hubli. I came from Chandigarh. I came from Lucknow. Are bhaiya.
But my parents already have a house there.
No, but you don't have it. And the parents would be jumping if you say, I want a real estate asset. I'm getting it for 75 lakhs in Indore or in Chandigarh or in Mohali. I will buy it there. I know that area. Generally, real estate you buy where you're familiar with the place.
Correct.
Or I am from Bangalore and I will buy it in Mysore because I have seen somebody who bought it in Mysore 3 years back. The property prices are already 50% up. Plus, the peripheries are growing.
But then I can't stay there, because my work
I can't stay there. But I can still buy it, put it on rent and create an asset because Mysore is as liquid as Bangalore is today, not earlier. And obviously that is why the prices are low. It is a risk and reward thing.
But is that the best thing to do? Because you're saying buy it and put it on rent. But the rental income is
my point
2-3%.
is buy real estate because what will happen after 10 years?
Okay.
Imagine.
You're saying the capital appreciation over there
is phenomenal. Even if you get 5 to 10% capital appreciation in 10 years, what you bought for 50 lakhs has to be 1.5 crores.
But 5 to 10% capital appreciation doesn't sound that interesting.
I'm saying the minimum, the worst.
Okay.
And the bigger ones is the moment you have GCC. You've heard of GCC? All these global capability centers. 50% of global capability centers are in India. All commercial offices. Google has an office here. Facebook has an office here. Apple has an office here. Microsoft has an office here. So what is happening now? They are opening offices in tier 2 cities. Why is there so much of infrastructure development in tier 2 cities? Why are we coming up with airports in these small cities? Because how will India grow? How will you become developed? You will realize that the first example is when Bajaj Finance opened their office in Pune 20 years back. They said, we will not come to Bombay. People said, how will you run a financial services, one of the bluest of blue chip companies?
Yeah.
They said, we will remain in Pune. Pune is our heart. Bajaj Auto is in Pune. Bajaj Finance will remain in Pune. The CEO came to Pune. The whole world came to Pune. It was a minus 100 crore loss company 20 years back. Today their profit is 12,000 crores. Now if somebody would have said this can happen, no, it's not possible. The only way to grow for India is tier 2, tier 3 cities, and that is a big one. And there are jobs there now because these global capability centers are opening in Coimbatore. Mohali, which is near Chandigarh, all the educational institutes are there. ISB is there. Government research science institutions are there.
So if you had to tell me in the order of priority of tier 2 cities, which are going to be the fastest growing real estate markets in India, in what order would you put it?
I would say Lucknow.
Lucknow is number one?
No. Let's come to that later.
Okay.
Lucknow, Indore, Tri-City, which is Chandigarh, Mohali, Panchkula, Jaipur, Mysore, Nagpur, Thiruvananthapuram, and
Gift City,
Mangalore, Ahmedabad.
Mangalore is one of them?
Mangalore is one of them.
Yes.
Definitely it's one of
Be
them.
rich.
Yes, absolutely. And 50% of investment in Mangalore is NRIs. And look at the prices in Mangalore, which are the way they are going to go. Now, force ranking it would be tough. But I think Lucknow has really done well. But Indore, I will, really put it at the top.
Yes, I'm hearing a lot of people saying I'm bought projects in Indore.
Yes.
What's happening in Indore?
A lot of development, because where do you go? Finally, where do you go? If I want to, where will the developers go? Why is Prestige going to smaller cities? Because enough of Bangalore, there's no land and the land is expensive. Godrej Properties is the biggest real estate firm today in India. They are in every single tier 2 city. They've just started, I don't know the exact, but some 30-acre, 40-acre plotted development happening in Indore.
Tell me about Mangalore, because that's where I'm from. What's going to happen in Mangalore city?
Mangalore is the same thing. It's all the educational institutes are there.
Yes.
It's a city which is along the sea. Tourism is underutilized.
Yes.
One fine day when tourism goes in and you have 5 stars coming in, Leela and Taj and JW Marriott, and you have 5 resorts coming in, people are dying to go. Today you don't get a place in Coorg in a 5-star property for less than 20,000 rupees a night. So it is one action, Sharan, that changes the landscape of real estate. See, and for that one action, you can't time it. So today, if you're buying it, and these are top 15, 20 cities of the country, you understand that place. I gave you an example of Chandigarh. I bought it because my father was there. But today I can't afford, because I will not invest in a 6 crore property to grow, as you rightly said. So Chandigarh has also satellite towns. So a lot of satellite towns will come up. These will be called smart cities. And this is where the government will get infrastructure. Government will give incentives for private companies to go there. They will give incentive to Wipro to open an office there. Infosys to open an office in Mangalore. Suppose they get huge incentive. As I just said, that if you're paying 250 rupees a square feet and you get a similar or a better building for 100 rupees a square feet with better, connectivity, you might be able to give 5% increment to people to come and go there, and you still make money and you save money. So what happens is the whole world grows around cities. So CBDs, then outer, and then outer, and then outer, and then it all gets connected. And the growth of India is in Bharat.
So
How many Hindi speaking people? Tomorrow, you might want a Hindi speaking channel. You might want, how will you grow? You'll have a Marathi speaking channel. AI is there. You'll have a Hindi speaking channel. You'll have a Telugu speaking channel. You'll have a Kannada speaking channel. And imagine a village in Karnataka. The first thing you have to do is you have to start a Kannada speaking channel. A village in Karnataka, you're telling somebody to do SIP and that guy starts doing 1,000 rupee SIP. It's going to be revolution. We are not able to reach those people. How did the phone, internet change the way? How are people able to do UPIs? Accessibility, ease. And when there is ease in real estate, the only thing that doesn't go in favor of real estate is it is not liquid.
yes.
But that is why the returns are far more than that. Because it is not liquid, you don't sell it. If it was liquid, you would have sold it after the prices were double. That's what you do in capital markets.
Right.
So I say it is a blessing in disguise that real estate is not liquid. Now you're saying fractional ownership will come, it will make it liquid, and you please buy, and you buy for 10 rupees, and you buy for 100 rupees, and you buy for 1,000 rupees. You are competing with stock market and capital markets in real estate. But the beauty of real estate is its illiquidity. The beauty of a father is that he is strict. The beauty of a mother is she is not strict, because you have to bring that balance. That is where real estate and capital markets is balance. Capital markets is the mother. Real estate is the father. So when it is illiquid, you can't sell it. So even when you wanted to sell it, you were not able to sell it. Karte, 10 years passed by, 15 years passed by, 20 years passed by, and you say, wow, this 50,000 rupees is today 2 crores. Thank God I couldn't sell it, and today I have a buyer. Because the higher the market, more liquid the market is. So that is why Mumbai is more liquid.
So when you're telling me about this affordable housing, I have a thesis, and this thesis is coming from what I've read happening in the US market and what I also suspect is happening in the Indian real estate market. So in the US market, what I've heard is that these private equity firms are buying large land banks, right? When I mean land banks, they're actually buying individual homes. So imagine a fund buying multiple individual homes in a neighborhood. And then they sort of do some transactions of selling it to their respective entities within each other and artificially hike up the price. Now, real estate, the prices, the last known price is the last transaction, right? That's what people look at. Now, the transaction is happening between them only. Now, once that new price has been established, the new homes that are being sold in that area is also sort of matching that artificially high price that they have created in that locality, which is also shooting up.
That is a bubble.
That is also shooting up the rent, and which is shooting up the rent and sort of making it unaffordable for people who actually want to live in those houses. And the landlords who do not want to live in those houses are just collecting rent. And the return on equity, whatever the math they want to do, has gone up. Come to India. India, real estate is black money bank for lands. Most of the real estate, I feel. Because when I look at 100 crore house, like you are saying, this DLF Camellias ka 100 crore apartment, you open the balcony, you see only smog and smoke. Why the hell anybody wants to pay 100 crore house overlooking the golf court, which you can't even see? I think it's at the end of the day, NRIs and all of these rich people of India parking their black money because they don't want to pay tax. So money has entered these spaces. Prices have gone up to unaffordable territory for the people who actually want to live in those houses, who are then forced to rent out those houses. So now, instead of paying EMI to the bank, they're paying a similar amount as rent to the landlords. This is what I think is happening.
See, what has happened is apartments today, none of the private developers are selling it for cash. That has changed. As I said, that is more of an equity money, ESOP money, etc., etc. So some of it is a different conversation altogether. But where you and I would tend to agree is it is just that one very small segment the media keeps on talking about and creating hype. That is the unfortunate part. You are not talking about what is required, what can be done, and and that is what policy advocacy is, and that is what CII does a great job, where you have to talk about Who are the people who are talking about doing affordable housing? Why did I talk about Signature Global, who has done 5,000 crores of affordable housing? Because nobody is talking about it. And that value is also 20,000. They have moved into mid segment and they do 1 crore to 3 crores, for example. But we are stuck to these, without taking names because I'm from the industry, we are only talking about 50,000 per square feet and 100 crore and this property sold for 200 crores and this house was sold in Lutyens, Delhi for 500 crores, because that is what is getting picked. But that is going to be history. You are going to have sub-cities. This US example that you did, Sharan, the moment you will try and make real estate into a financial transaction, you are getting into a problem. Because you are moving its illiquid part into liquid part. And the moment you are moving its illiquid part into liquid part, it is not real estate. Anything which is liquid should not be called real estate according to me. Because its strength is illiquid. Jewelry, gold is India's strength. Because will you ever sell your wife's or your mother's gold?
No.
Why not?
Sentimental, emotional value.
So real estate is also emotional value. But we again walk to commercial real estate because we want returns. Arey bhaiya, I'm saying stop thinking about returns if you want to be rich. If you want to be rich, stop thinking about returns. That is why we do SIPs. We are saying don't look at the market every day. Discipline over growth. Fill it, shut it, forget it. Why do you want real estate to be like capital markets? Why are you talking about liquidity? I say its biggest, most beautiful part about any asset like real estate is it is illiquid. Most beautiful part about gold is it is illiquid. Now we got gold into, we can trade it. You have ETFs. But yeah, it is no more gold. It is just an asset class which is like gold, which is linked to gold. Obviously, they have to buy as much of gold. But real gold is lying in the locker of your mother, my mother, your wife, my wife, your aunt, my aunt. And that is where it helped the poor and you had gold loans, etc. And when it is required, it was there. And the value of gold has also gone up. India's strength is in its wisdom, ancient wisdom. That is why ancient wisdom was gold, was real estate, and equity market is important because it balanced it. Anything which doesn't have a balance and it is lopsided. Now, everything is illiquid. Should not be. But why is 80% in real estate? Because it is illiquid. It kept on growing. It suddenly became 80% because you could not sell. And then you could sell because it became liquid over a period of time. People want it. That's how infrastructure is building. Now, where the roads are, buildings have to come. Why are you making roads? Offices are coming. You need cheaper real estate. You need cheaper land. Why did people go to Alibag? Because land was cheaper. That is why you bought it 100 crores. Sir, please buy 100 acres in Mumbai. You don't have it. So you will go to... real estate is like water. It will find its way. And there is a lot of real estate. That is why I'm saying a national affordable policy. Somewhere, say for example in West, somewhere between Mumbai and Pune, give 100 acres to all these top developers, Lodhas and everybody else. And tell them only affordable. The property value cannot be more than, 1 bedroom cannot be more than 50. 1.5 bedroom cannot be more than 75. 2 bedroom cannot be more than 90. 2.5 cannot be more than 110. We subsidize land. We subsidize interest rate for the home buyers. We subsidize interest rate for the developers. It is a win-win. Because the developer also has to make money by the end of the day. So it has to be a public-private partnership. Imagine what will happen.
I think the developers are right now choosing the luxury properties.
Because they also need to make money. They are businessmen, right?
Margins are higher.
Margins are high. Margins are better. Unit economics is better.
And there's only a finite amount of work they can do.
Finite amount of work they can do. Why did, India doesn't have scale, Sharan. Where is the scale? America makes 500 fighter jets every year. You know how many we make?
How much?
2.
We make 2 jets a year.
Yeah. That's what the air chief said. How will I fight?
Okay.
America has 5,000 airports. We have 125. And we are saying, so infrastructure, connectivity, which is now coming, roads, we have done a great job. And that's how you will say real estate will become affordable. The government has to intervene. Land policy has to improve. And the moment government intervenes, you will have jobs. You will have people. Today, what is the biggest challenge of real estate? You are not getting construction workers because not as many people are coming from Bihar, UP, Odisha as they were coming earlier.
Right.
Because their life there has improved. And what you can live in 20,000 rupees in Mysore, you can't live in 20,000 for Bangalore. You hear, I was making 2 lakh rupees. I was feeling depressed. I started my own business. Now I am making 5 lakh rupees doing something own because Bangalore also 2 lakh rupees, is less. So what will you do? You will find out ways. See, the beauty about water is it finds its place. And that's what will happen in India. The next 15 years, Viksit Bharat, Prime Minister's vision of housing for all, which is great. And now the best thing with what, America is doing with us with tariff and all, we have to start being self-reliant. And that is when tier 2, tier 3 cities will come up. What did we do 10 years back? 7 cities. Everything is Delhi, Bangalore. Bangalore also 20 years back only. In 1980, what was Bangalore? Nothing.
So let's do this quick exercise. Let's say I have 1 crore to invest. Tell me the best tier 2 city to invest in different parts of India. Let's start with North India.
North India, best city to invest can be Lucknow and Indore and Jaipur.
Okay.
Even Sonipat in Haryana, which is near Delhi.
South India?
Mysore, Cochin, Mangalore, Thiruvananthapuram.
Okay.
Outstanding. Even Vishakhapatnam.
Okay. West India?
West India is outskirts of Mumbai. I would still say you will get something for 1 crore.
Mumbai 3.0.
Mumbai 3.0. Outskirts of Pune, because Pune and outsides of Mangalore, the prices are same. Pune, you can get a home for 2 bedroom for 75 lakhs.
Okay.
Aurangabad, Kolhapur, Nagpur, Nasik, the whole wine. Nagpur is becoming the transportation hub. Lot of action is there. Nasik, lot of action is there. Tourism is getting picked up.
Okay. And last one, East India.
East is something which is a challenge in India. So it's the outskirts of Kolkata, and maybe one city that can really do well is Durgapur.
Nothing in Northeast India? I hear a lot of good things.
Assam is good. Assam is good. And we will see some action in Northeast because the moment you have better infrastructure development, today what has happened is the entire hospitality, the low skill of India is fed by Northeast.
The what? The low?
The low skill labor,
Okay.
which is in hospitality,
Right.
in other than, construction and all. It is all Northeast people coming in and working in hotels, in saloons, in airports. So that is one area which needs a whole lot of blue ocean strategy, and how do we build it, because there are a lot of geopolitical challenges, etc. also which are there.
So I was recently in Dubai to understand the real estate market over there. And what I understood over there is that the government and the developers work closely with each other to create
Highly regulated.
master plans.
Highly regulated.
Highly regulated.
One of the best RERAs in the world.
The Dubai government. Right?
Absolutely. Because they saw a huge shock in 2008. And it was a huge shock when the real estate market slumped. After that, highly regulated. It is one of the best RERAs in the world.
But that's a centralized, proper RERA.
Absolutely. Very centralized.
So we need something of that sort in
we
India.
we need a RERA which is as strong as SEBI.
Why is not? Why nobody has worked on it yet? The centralized RERA.
See, it's tough. It's a democratic country. It's always been a state subject. So for every state to agree
How my city should be planned
how my city should be
at a
planned
centralized level.
at a centralized level, because the maximum revenue also comes from real estate, right?
Because that, I think, is at
Real
the
estate
epicenter of our
as
growth. Because city planning is at the epicenter of
Real
our growth.
estate is as close to our government as the liquor industry is.
Because it's a revenue generator.
It's a revenue generator. That's why the entry into real estate for developers, you always see those many developers only. You don't see a new developer coming in every year. Why? It's land. It's legal. It's complicated. It's very tough. That is why early entrants have had the advantage. Why can't Sharan and Ashwinder become partners and say, oh, we want to be real estate developers?
We don't have the money.
We don't have anything related to it. We don't have the money. We don't have the understanding. We don't have the connections. We don't know how to evaluate land. We don't know how to do the legal due diligence of land. How many people are owners? So on and so forth. Unlike a Singapore or a Dubai where everything is owned by the government. There is no problem, right? If you and I have money, we can become developers in Dubai. We just have to go say, this is the money. They will give us the land. And because the land is being given by the government, there is no legal issue.
Oh, here you can't do that?
Here there are multiple owners. You see land, who owns this land? You try and find out whose land is this on which this building has been made. You will never come to know. Multiple owners.
Really?
Land is a very complicated subject. That's a different story altogether.
Multiple owners for land.
Different story altogether. Land buying, land acquisition is the toughest part in real estate.
Why? Why is it so tough?
Very tough. Because it is the nature of the beast. In one family, there are 20 owners. You bought a land from somebody. They said there are 4 brothers. You bought it. The moment you will buy it, you'll register it. There will be one person who will come. I am the 5th brother. They never told you.
What is he coming to?
It's by design. He'll say, I am the 5th brother. You didn't come to me. I don't approve the sale of the land.
Then we need a signature.
We need a signature. And you've already invested and you've done everything and you've paid.
Now he'll try to strong arm you.
I don't know.
This is a very common thing.
It is a thing. It is just one example. There are hundreds of examples.
Tell me what other kind of blunders which retail investors do when investing in real estate.
The reason I ended up writing this book was that
you've written a book on this topic.
I've written a book called Master Residential Real Estate. Then I've written a book, Master Commercial Real Estate. And I was writing a book to clarify my own mind. And I realized if somebody has to buy a home, there was no book.
Right.
And imagine the number of books which are there on capital markets, on futures, on trading, on equity, on debt. There was no book. My book is not doing well because it is very good. My book is doing well because it is the only book. I like my book. But the fact is, I wrote it because I realized 80% of the people make a mistake while buying a home.
So can you tell me all the mistakes that people make?
Very tough, Sharan. People make mistakes on ownership. People make mistake on design. They needed a two bedroom. They end up buying a 1 bedroom. They don't stretch. People make a mistake. They should have lived in an integrated township, but they buy a standalone property because in an integrated township, it would have been good for their parents. They can walk. You can walk to work. You can walk to play. This is the new thing that is happening in India. You can make a mistake in terms of your home loan. You can make a mistake that you were charged a higher home loan. You don't know various structures of home loan that you can buy. There is a balloon payment. There is a regular payment. There is a subvention. There are so many things on that. So I have covered all of that in that. Financially, what you have to do. How do you select a location? What makes a location a good location? Now, if you have a budget of 1 crore and you're looking at a location where the minimum budget is 5 crores, how will it work? So what is a good location? Is it being near a metro? Is it being near a college? Is it being near a hospital? Is it being near your work? Is it being near the school of your child? Is it being in a 15-minute city? What is a 15-minute city? Now, an integrated township, the study is that the price of a property, residential property, increases 20% more in an integrated township, something like Powai, than what it does, or something like any other integrated township, than what it does if it is a stand-alone building, especially after COVID. Secondly, in a city like Bangalore, where for 5 kilometers of travel, you have to spend 40 minutes. You want to stay in a place where you can walk to work, go to school, go to a hotel, go to a mall, right? Where will that come? That will come in the outskirts. So when these new policies come, you have to come up with the policy for integrated townships, so that your work is there, your school is there, your office is there, your home is there, you can walk to work, your parents can sit in a park, you can cycle, your kids can cycle, there is no thorough traffic, so on and so forth. And if you are living there, you should pay a premium, and your property prices should also go up.
I think this is what was being sold in Alibag.
Yes.
This was the dream.
Yes. So, for example, why do you invest in a blue chip? You want low returns, but higher stability. Why do you invest in a balanced fund? You want low returns, but more predictability. You want to invest in a penny stock, be ready to lose it all also. And maybe if you are lucky, you'll grow it 100 times.
Right.
So real estate is a blue chip investment, and it is all about lot of mistakes people end up doing. And people even see real estate ki kamal ki cheez pata hai kya hai? Sharan, everybody thinks he's an expert in real estate. Everyone I meet, he makes me feel he knows more real estate than I know. So when they call me for a keynote, I say, boss, you all know real estate. You will say, I have bought, I have sold, I have taken on rent, or my father bought, or my father-in-law bought. So, real estate is about overconfidence. And this is the most talked about things in offices. Arey, where are you investing? Which is the new launch? Oh, Lodha has come with a new launch. Okay, I will also buy in Lodha. Okay, I will also buy in Lodha. Okay, 5 of us go, we will get more discount in Lodha. Let us go and buy in Lodha. So, this is what is happening in an office.
Right.
So, he's saying, oh, what is Ashwinder saying? I know real estate. And the biggest enemy of somebody is overconfidence. And you end up making a mistake. For price, you compromise design. For design, you compromise location. For location, you compromise quality of building. There are multiple things. There is the legality. There is RERA approvals. There is legality. There is design. There is price, architect, open spaces, amenities. Is it good for older people? My way of good design is it should be built, a city should be built for people thinking everybody is 80 years old. Will they be happy staying there? Who is thinking like this? Then people think I'm crazy. If I think about your father and build a city, imagine even the kids are taken care of, traffic is taken care of, sustainability is taken care of. Because as you rightly say, most of the things which are told in real estate, because it hasn't been that regulated, did not happen. That is why it lost its reputation. And reputation is the only currency you can work on.
Right.
People follow Sharan Hegde for reputation, for education, for adding value to their lives. And that is where something called trust was lost. And trust and reputation is the only currency on which real estate has to be built forward. And there are some great developers. West Mumbai has great developers. North has great developers. South has great developers. Bangalore has wonderful developers. And they are the people who are the backbone of the Indian real estate industry, and they will take it forward.
So when a builder is doing some marketing, saying that I'm launching this new project at X rupees per square feet, take this property from me at this kind of a loan, EMI, interest rate, whatever. How do I, as a retail homeowner buyer, know if that is good value for money? Like, how do I assess if I'm getting it at the right price? Because there is no way for me to sort of, like for example, in the world of stock market, if I'm buying a price of a stock, there are several, ratios that I can look at to assess the intrinsic value and compare the market price with the intrinsic value and then buy. What do I do in the world of real estate?
See, now what has happened is there are a lot of portals which are there where you can see what... Sorry.
I think it sounds basic question to you, but it's a very...
No. So I'm giving you an answer. What I would do. I would go to a Magic Bricks or a 99 Acres or a housing.com or any other portal and see, suppose if there is a launch in Andheri West, what is the resale value that is happening in Andheri West micro market.
Okay.
Real estate is a micro market subject, then it is a city subject.
Okay.
Because Mumbai prices are different, Pune prices are different. Within Mumbai prices, Worli is different, South Mumbai is different, Vashi, New Mumbai is different, and Eastern Expressway is different, right? All these markets are very, very different. So you go, there are these, portals which are there, which are now established for more than a decade. You will understand what the price of that micro market is. There are some research companies like Prop Equity, Lazarus Forest, which are there, which do a lot of work for a lot of B2B companies. You can go to their websites also. And then you recalculate and recheck from your local channel partners, who are your brokers. And they're all now RERA certified, because you can't sell if you're not RERA certified.
Oh, brokers are also
Yes,
RERA
yes.
certified.
You can't be a broker without clearing your RERA certification.
Interesting.
So there's a lot of sanity that has come back. And basis that, you figure out that, okay, the price is 2 crores. They are launching it at 2 crores. Now, the beauty of a new project in 2 crores is you have to pay 2 crores over a period of 4 years. When you buy on resale, you have to pay that 2 crores immediately.
Yes.
Why do you buy a pre-launch project? Because one is that you expect the price to increase in the 4 years.
Yes.
Plus, you are paying over a period of 4 years, which is construction linked. So you don't have to pay the whole thing. That is what makes it interesting. But I wanted to be very honest, and I wanted the audience to understand that just because I'm in real estate, I don't want to talk about all the hunky-dory things in real estate. Right? So, but today the pricing and all is taken care of by RERA. It is taken care of by micro markets. You know what the ongoing prices are. Then you can pay a premium if it is a luxury, if it is a premium, if it is affordable. And what is affordable? Affordable will be tiles. For example, I'm just giving a very simple. Premium would be,
Wooden flooring.
Wooden flooring, and luxury would be marble or granite, so on and so forth. So you can see what the amenities are. You can see what the specs are. You can see who the architect is. You can see what the design is. And you can see where the location is. So these are 5, 6, like this is what my book talks about. How do you realize it is good? So, for example, fewer amenities means you have a basketball court and you have a small club. Better amenity means you have a larger club, you have a gym, you have a sauna, you have a bigger swimming pool, you have a cricket net, you have a basketball court, you have a salon, you have a grocery shop, right? You have a walking track on the terrace, and so on and so forth. And you have then, smart lights, you enter and the lights open up, you have IoT and all that. So you keep on going, deep into it.
So what are some builder negotiation tactics that I can use when I sit in front of them?
See, one is market. If the market is not that great, the obviously, any product, they are, the tactics generally are, one is if you are, not okay with the price, you can ask for simple discount. Or you can, the best thing that somebody can do, I shouldn't be saying that, but I will still say that. Why I should say that is, you can negotiate on the payment plan. You can say, rather than taking 20% each every 5 years, please take 15% each every 5 years. Or if you're taking 25% every 4 years, kindly, right now,
every 5 years?
Say for 4 years, if it's a 100 rupee project, you pay 25 rupees every year.
Okay.
So you're saying, okay, can I pay it in 5 years? Or can you negotiate? Because generally it's not the price. It's the way, if we can give you some comfort in terms of paying for it. The best negotiation is not to get discount, but to get a good payment plan. Especially for somebody with 1 lakh, 2 lakh rupees of monthly income. If his EMI is there, and if we say, okay, we will, you have to pay 25 lakhs first year, and you say, okay, first year you pay 20 lakhs. Next year you'll also have a salary increase. Then you pay 28 lakhs or 22 lakhs. Then you pay 30 lakhs. Okay, because your salary will further increase.
Good motivation to get.
And so it's here the discount is not the actual discount. It is the payment plan that you can ask for. Or you can ask for, why don't you give me a kitchen, built-up kitchen? You'll end up paying 5 lakhs. So the developer will say, okay, I'll add value.
What is built-up kitchen?
Matlab, if it's a raw shell, you'll say, okay, the developer will say, kitchen I'll make for you. I'll do the cupboards, I'll do everything else. Or, you can tell them, give me a better flooring. If you're doing it for end use. So there are multiple ways in which you can negotiate, and developers are fair. As it is, the quality of construction has improved and a lot of other things are there, and they will themselves also guide.
So one is the payment plan, which I can negotiate.
One is the payment plan. Second is semi-furnished, furnished.
Customizing my house.
Customizing your house. You're right. Third is you can actually ask for an immediate discount or some sort of things. But there are certain developers who might not give you anything because, for example, I do not give any discount because I know my pricing is very good. I
mean, you are already selling at 45 lakhs, which is
so it depends.
When if somebody is charging, let's say 1.5 crore,
yes,
what percentage discount can I negotiate? Because most people don't know what to ask.
It's very generic, Sharan. It is very generic. It can depend on if you're making the payment upfront. He might say, okay, I'll give you 10% discount.
Upfront, matlab give all the money, right?
Give all the money right now if you want to save. It's NPV, right? It's net present value of money, right? Or, he'll say, okay, I'll give you 5% discount, 2%, even 2% on 1 crore is 2 lakhs.
Yeah.
So you don't go on percentages. So it depends. It varies. And, but I don't think you can get discounts which are more than 2 to 3% at the outset, unless until, there is a specific deal that is going on or something else.
Can you give me a strategy on generating passive income on real estate? So, we are in Mumbai.
Yeah.
I know a lot of, third generation families over here. I know a guy who's like 45 years old, third generation business owner who has like 30, 40, properties, which is giving him passive income. How do you sort of reach a position like that? Can you give us a strategy for generating passive income in real estate?
So passive income, Sharan, as you also rightly did, passive income generally comes from commercial properties, rental yielding properties. Because residential properties, the rental yield in India is anywhere between 2 to 4%. It has increased maybe 2.5% to 4.5%. Some places are also 5%, but it depends. As I said, integrated townships have higher rental yields than standalone.
But there's also the Airbnb short rentals.
Yeah, Airbnb is more in the second home market like Shimla, Mysore, Goa, Coorg and all that. So you can either do that, but then maintaining that is also an issue. But yeah, if you can give it to Airbnb in markets like Goa and all, it works very well. REIT is something which is fantastic for passive income because REIT is something between debt and equity.
Okay.
It is real estate. REIT gives you 5% annualized increment because all rental lease deeds are done with 5% increment every year. So the rent is going to be increased. Your rent in office will increase by 5% every year.
Yes.
So it will increase by 15%. There is another 5 to 7% of capital appreciation that I am taking into play. So you make 12% of, for a retail person to have passive income, REIT is great. For HNIs, you can buy commercial properties, you can buy commercial buildings, you can buy a commercial building which is already on rent, then do an LRD, do a rental lease discounting. You get the money also.
What is that rental lease?
Rental lease discounting, you go to a bank, you say, I have this building, I am getting 10 lakh rupees of monthly rent, right? So he will say, okay, I will discount this 10 lakh rupees. I'll give you a loan of 70 crores. And this 10 lakh rupees will come to me now as an EMI.
To the bank.
Huh. So you suddenly get 70 crores of release. And it is at only 10-11%. Because it is the risk-free lending for the bank. Because bank knows the tenant is Google, Microsoft, Tata's, Birla's, Godrej. So they are not going to default. Right. So lease rental discounting is something which HNIs do a lot. They buy a building, invest 100 crores and then do an LRD, get another 70-80 crores on that, further invest another commercial building, and that's how they keep on building their commercial real estate portfolio.
So let's say I start with 10 crores.
Yes.
Give me a plan where I make this 100 crore with the power of leverage. Can you just give me that step by step?
So you have a 10 crore property.
Okay.
You are on 10 crore property. Suppose you are getting...
Let's say I buy a floor.
It's a commercial building.
Let's say I buy a floor in a...
It's a commercial floor.
Okay.
It's 10 crores. You're getting 7% returns.
Okay.
So on 10 crores, you are
rent.
getting 70 lakhs.
Right.
Right? 70 lakhs pe, suppose you can get 7 crores. You can pay a EMI of on 7 crores. Your EMI will be say 70 lakhs. So what you do is you've bought it, you get LRD for 10% and you get 7 crores on that. On 7 crores, you further invest 7 crores and you buy another building.
So it's like using my 10 crore ka property which is already on lease, which is making
And
70
there
lakhs
is
EMI.
rental.
70 lakhs ka rental I'm getting. Move that 70 lakhs rent to a 70 lakh EMI.
Yes.
Which is unlocking 7
Yes.
crores worth of money.
You're outstanding. You're very intelligent. Absolutely. So
7
basically,
crores.
Yes.
And that 7 crores I will deploy into another.
You are converting your rental income into an EMI to buy another property. And your real estate,
70%
which
of
is
the-
70% of that, which is further 70%. So you don't have to do it immediately. But over a period of time in 10 years, if you've done it 5 times, you've built a property portfolio worth 50 crores. And this 10 crore in 10 years or 5 years would have also increased.
But where does it
12
end?
crores.
Then I reinvest into a 7 crore property.
Yeah, these are
Then I can
ballpark
repeat
numbers.
that. No? 7 crore again I can put
7
on
crores,
rent.
suppose you are getting a rent of 50 lakhs. Or, so you can again do it.
Again I can unlock 5 crores. So I can keep doing it, doing it.
Till the time you can.
So I can go at
But you also
4
need
levels.
some returns, right? This you are assuming that your returns are further coming from somewhere else and this is only used to leverage and buy more commercial property.
Correct.
And your rate of interest is the lowest on LRDs.
Correct. 10% like you said.
Lowest.
So my return on equity goes up really high.
Yes.
So I started
and
off
they are
the-
lowest because this is the safest for the bank and housing finance companies to invest in. But what they look at is the quality of the building and the quality of the tenant. That is a caveat. But people who are super HNIs, they do it beautifully well.
Yeah, because this is a very beautiful way of leveraging
Beautiful.
my return on
Yeah.
equity.
And you are just not investing everything in residential. That's where your diversification within real estate comes in.
Perfect. So, finally, now let's talk about the digitization of real estate, which we talked. REITs, did that to a certain extent, but now we're hearing talks of putting real estate on the blockchain, right, where you can sort of trade the units,
Fractional ownership.
fractional ownership, but on the blockchain.
Yeah.
Where are we on? Can you first explain what that is and where is India on that?
Basically, now you can buy just 1 square feet.
Which was not possible before.
And within 1 square feet also, you can buy just rupees 10 worth of 1 square feet.
Wow.
So there are companies who are doing that. SEBI regulations are there. This will be, I think, under SEBI, not under RERA. RERA will come in because it is real estate, and SEBI will also regulate it because you are democratizing it and making it a financial instrument.
For the public
You are making
masses.
it more liquid. Now you will have exchanges. You don't have exchanges today that you can go and buy 10 square feet and tomorrow when you want to sell, you can sell it. So that is where a fractional ownership company is saying, okay, I will use my own money. And if you get an investor, they will say, okay, you invest and tomorrow if you are not able to sell, we will liquidate it.
Yeah.
So we are a little nascent. This is happening in the US very well. But
I think
we
Dubai
are not
also.
as nascent. In the next 4 to 5 years, I think this fractional ownership will really come up. We are in fractional ownership where...
But how is it different from a REIT? REIT is also fractional.
No. REIT is listed. REIT is a unit of a mutual fund.
But I am only a unit of
It is a treasury that is now managing it. SEBI is managing it. It is, an investor came, invested in REIT, the money went in, there is a money that is now allocated to the treasury for liquidity. That money is being managed like a bank manages its surpluses.
But materially for me as an investor, what's the difference? Because I'm getting
Materially, REIT is only commercial. Fractional is anything and everything, and there is a private player who says, I've fractionalized it. So you and I say we have fractionalized this building, this 5,000 square feet.
I can put it on that.
And I will put it on a blockchain platform and you can come and buy 1 square feet. This 5 lakh square feet is worth 500 rupees. If you want 1 square feet, you pay 50 paisa and you buy it. And tomorrow if it becomes 60 paisa because I have my own exchange, You can see it and you can either book your profit of 10 paisa or you can sell that entire 60 paisa. But the point is, this is at a very nascent stage.
Any company which is working on this?
There are a few companies like in Bangalore. There's my ex-friends, colleagues, industry colleagues, Alt DRX is doing this. And they've been working very hard for the last 2-3 years on that. You can visit the website also.
What is it called?
Alt DRX.
Alt TRX.
DRX. D for Delhi.
Alt DRX.
Alt DRX. And they actually, Harsha Bhogle is their brand ambassador also. And they're saying buy 1 square feet at a time, or I think they also say invest 10 rupees only in real estate.
Perfect. Ashwinder, I think very, very, like I began the conversation saying that I will end this discussion being 10 times more smarter. I think I've become 30 times more smarter. Learned a lot about the residential real estate market, which I was really, really against. But thank you so much for coming on the show and giving us all your wisdom and sharing all your knowledge of 30 years with us.
Thank you. Thank you, Sharan, for calling me. I really enjoyed this.
All right, guys. On that note, I'll see you in the next one. Before you go, guys, if this episode gave you even one insight that made you think differently about money, don't just keep it to yourself. Share it with your friend or family member who could use it too. And if it sparked a new thought or even made you disagree with me, drop a comment below and tell me why. Your critique helps me make these conversations sharper and more useful for you. As long as you have me subscribed, I'll make sure that you walk away with at least one new thing every Wednesday.